Greetings, I'm Brett Carleton, coming to you from the offices of Heritage Wealth Management. As we take a minute or two just to look back on the second quarter of this year, I think the only thing I can say about it is wow. If you think back to April 2nd of this year, Donald Trump introduced the new tariffs that we're going to impose on our trading partners, and the global equity markets did not react positively. Many investors panicked. Actually, it was interesting. Vanguard came out with a note that it was primarily institutional investors, that individual investors didn't panic. So maybe we're learning something here. But I think this is going to go down as one of those prime examples of why we cannot react to news events. Because as they saw how negative it was, they began to delay some of these, and the markets recovered very quickly. And today, as we look at things now, there's positive reaction to the markets when we're getting close to a new trade deal or new trade terms with one of our trading partners. And we just don't know how these things are going to turn out. One of the side benefits of all of this now is many foreign-based companies as well as US-based companies have announced literally hundreds of billions of dollars of capital investments here back into the United States. And we'll see how all this works out, because this probably all won't happen, but that has the possibility of having a huge impact on growth going forward here in this country, as well as additional jobs. So we'll just have to see how all that plays out. But so what do we do when we get news like this? Well, here at Heritage, we took advantage of some tax loss harvesting opportunities as they presented themselves. So not for everyone, but where they presented themselves. We did some rebalancing. If you remember, the last couple of years, we've had significant growth within the equity markets. So we pared back some of the things that had done extremely well and put those into some of the asset classes that had lagged a bit. And we've been rewarded for that. Another thing that's happened is that we've come out of this is the breadth of this rally has expanded dramatically. It's not just these magnificent 7 stocks or 7 companies that we've been hearing about, but it's spread to very broadly based across the entire market. And not just here, but also our international portfolio. Our international stocks and the emerging economy stocks are actually our best performing sectors year to date, in spite of all this tariff talk. So again, we can't and we don't want to react to news events. We want to stick with what's tried and what's proven and what works over time. And that's what we do here. I know there's times where the news is a bit overwhelming. If you need to talk with somebody, we're here to listen. But let's not react to these different news items and events that come out. As I look right now at what's happening around the world, we've got war in the Middle East, we've got war in Europe. The United States actually even entered in a bit to this war in the Middle East. Hopefully that is the end of it. But in spite of that, the markets continue to do well, because the overarching theme in all of this is it's about companies that we invest in, and it's about earnings, and companies are making money. And right now, the future, the forecast actually looks quite well. The first quarter of this year, we had negative GDP growth, but that was primarily because of all the extra imports that were brought in anticipation of these tariffs. Now, early forecasts of the second quarter actually are pretty optimistic, so we'll have to see how this turns out. But I think there's many reasons to be positive as we look forward. Employment is still strong. Interest rates have come down to well within the range the Fed is hoping for. And if we were to take housing out of there, inflation is actually far below the Fed's target rate. Housing is a lagging indicator. It takes a long time to come down in value, but we're beginning to see around the country now home prices come down. So hopefully that trend will continue, and maybe possibly we'll have the Fed even lower interest rates, which should be a real boon for housing as we go forward. So as bad and as negative as the news is out there, again, as we look at the fundamentals, what's happening within companies and sales, it's positive. Consumers are traveling, consumers are doing things, consumers are spending money, and that's what drives the economy. So we've got Independence Day coming up this Friday. I encourage you to get out, enjoy the weather. If you're somewhere not as hot as Houston, maybe you can get out and enjoy the weather a little more than we do down here. But grab a book at summer reading time. And as always, please share any comments or thoughts that you have with us. We're here and we're always anxious to hear what you have to say. So thank you.